Let's get across the market open now. Kyle Rutter joining us from capital.com. Kyle, welcome back to you. Just taking a look at that session on Wall Street overnight. Of course, it's been a very strong week. More records falling, more of a muted session, tech pulling back a bit.
Yeah, and I mean, it's a bit of a cliche, but you could probably say that profit taking wouldn't be far from the truth after the kind of, 3-4% rally almost that we had in the Nasdaq the session prior. And it was a bit of a late swoon in tech that kind of pushed Wall Street into negative territory. It was a session without a great deal of impetus. We had some data that was a little bit softer than expected, and that sort of bolstered the chances of rate cuts. I should say, lowered the chances of rate hikes for the Fed's September decision. But otherwise, there's kind of this hearsay going on about the negotiations between the US and Iran, and there was probably a few little false starts there in the markets when headlines were coming through suggesting that a deal might be imminent, and that was a boost to market sentiment, obviously, via this weakness that we've seen in oil prices, albeit oil basically closed flat for the session after some choppiness. So really, it's a market that is probably pausing for breath just for the time being, and now waiting for either a breakthrough when it comes to US-Iran negotiations, or, in the absence of that, what non-farm payrolls data on Friday night is going to tell us.
Interesting. We did get some commentary from Fed member Neel Kashkari overnight saying now is the time to lift rates.
Yeah, not awfully surprising because, it was obviously his name to one of the sort of three dissenting rate hikes that was revealed last week with the FOMC. But it kind of shows you the direction of travel at the moment for the Fed, which is, for the most part, if FOMC members aren't already on board with a little bit of, we'll call it a calibration hike to tighten policy, given obviously the inflationary dynamics that seems to be playing out through the US economy, then certainly people are kind of on the way to getting to that point as well. And that the markets are kind of reflecting that now too, that we have seen a bit of a repricing of rate hike expectations after the sort of, call it, less hawkish than expected Fed last week and some soft data this week. But it's still kind of considered a matter of, when the Fed hikes rates rather than if. September was fully baked in. Now it's a 50-50 proposition. We still have a hike basically priced in for the end of the year. So, Kashkari is more or less the kind of person that is quite backward looking in the way that he analyzes the data. He'll sort of look at the numbers as they are, won't kind of skate where the proverbial puck is necessarily going, but his basic logic, like it was when, he was advocating quite seriously for cutting interest rates a few years ago when the labor market was a little bit softer, was that inflation's too high. We've got that in the official numbers. Let's hike and get it over and done with. So it has to be said, the odds of a hike in September did moderate because of some data last night out of the States. But once again, the markets are treating this as a matter of, when and not if the Fed hikes. And, Kashkari's comments kind of are a little bit of an indicator of that.
Kyle, what are we to make of the latest news flow out of the Middle East? Look, we've heard this all before, haven't we? Close to a deal. Look, obviously oil prices have been under pressure on the prospect that this is close to happening. But as I mentioned, how many months of commentary like this have we heard?
Yeah, plenty. And I mean, the markets obviously move on headlines, and sometimes it can be kind of a matter of the Keynesian view contest where, really it's only the expectations that someone else is going to sell the market that means that you will, in a headline that, may be fairly shallow. But what we are seeing is that there are talks going on between Iran and Oman about who controls the strait and potentially reopening it. We're hearing some constructive signals from the Qataris that there is a, call it, peace deal, the wording of a peace deal that's sort of coming together that might mean we'll sort of revert to where we were a few months ago when the first memorandum of understanding was signed. And there's also news that out of the United States, obviously the last few days too, that negotiations could yield some kind of détente, if nothing else, that will remove some of this very significant geopolitical risk in the region, which, of course, stopped flow of oil out of the Strait of Hormuz. Still, as we stand right now, there's that threat that maybe the conflict will expand a little bit. And, we did see some of the disruptions in the Red Sea being a factor pushing up oil prices as well recently. But the overarching thing here is obviously trying to remove that geopolitical risk that will also be a risk to energy infrastructure with the kind of threats that we got last week from the Trump administration and threats from retaliation from the Iranians too, that, would bring those kind of very critical assets into play. So with that kind of risk diminished a little bit of, choke points being choked up and energy infrastructure being targeted, quite rationally, the price of oil has dropped now. And the markets are really just looking for this signal that, we can at least revert to where we were a month ago, or maybe even 6 weeks ago now, where, you know, we were at least talking about peace. That would be a massive breakthrough for the markets. There are all sorts of questions as to whether that will be lasting or not from there. I would dare say that we'll probably continue to see these flare-ups over time, especially considering that, the kind of negotiators that the US are talking to and Iran are the moderates, and those who are sort of firing the missiles, if you will, are the sort of the radicals that are much more inclined to continue to drag out this war. But nevertheless, there is this optimism we'll get a deal in the next few days. Oil prices were very neutral and were choppy on headlines last night. But we're just waiting for that breakthrough now. And that might be the thing that kind of sets off market sentiment once again, bullish sentiment once again, if we actually get at least, again, a kind of pause détente in the recent flare-up in this fighting.
So, Kyle, what can we expect for the Asian session? Certainly here at home, reporting season continuing. We've got some key results, in particular from AMP, News, REA Group. More broadly, what should we expect?
Well, I mean, overall, from a market perspective, I think it's really going to be looking for that next catalyst. And it's either going to come from a breakthrough in US-Iran talks, or it's going to come as we head towards these non-farm payroll figures on Friday night. The key thing here is obviously interest rate policy, interest rate expectations, combined with the geopolitical risks, which also inform those interest rate expectations, but then also earnings out of the United States in particular that have been very strong. And clearly the domestic element is going to be there too, where our own earnings season is going to inform whether basically valuations at the moment, with interest rate uncertainty diminishing globally at the margins and geopolitical risk diminishing at the margins again, can sort of justify this liftoff once more in equities and push the market higher. But that requires a catalyst. We're still searching for a catalyst. I suspect it'll either have to be US-Iran breakthrough or Friday night's jobs data. Until then, a little bit like what we saw on Wall Street last night, there might be a little bit of treading water going on until we get that spark.